Hello and welcome to my YouTube channel. I'm here to present this video for first steps to home ownership. The first step is financial preparation. You're going to want to prepare your finances, even looking at your credit score and making sure that it is around 640. There are mortgage loans for credit score significantly lower than that, but if you want the best interest rate and the best repayment plan, you're going to want to aim for a credit score around 640. You're going to want to gather your two most recent pay stubs, 2 years of W-2s, and your past 2 years of federal tax returns in order to move forward with step two, which is getting pre-approved locally. So that's what your lender, mortgage broker, bank, or credit union is going to need to pre-approve you for a mortgage loan. That is not a guarantee that you will be approved for the actual loan. It's just a brief look of your basic information. And they can say at that point, it looks like based on this basic information, they could afford a line of credit in this amount. That's a pre-approval. It's not a guarantee. You're also going to want to count for taxes and HOAs. HOAs, you're going to incur those monthly or annually when you're moving into a community or neighborhood, especially with amenities. The more amenities, the higher your HOA fees are going to be. And you're going to want to count for taxes. So taxes are prorated at closing. The seller will pay taxes up to the closing date, and you'll be responsible for the remaining taxes for that year after the closing date. You're also going to want to budget beyond the down payment. So save, aside from your down payment, save 2 to 5% of the home price for closing costs. And that brings us already to step 5, mandatory closing representation. So all South Carolina real estate closings occur in an attorney's office, so they can represent you and close out those legal documents. And you're going to have to pay them attorney fees, title search fees, insurance for titles, and prepaid taxes will all be due at closing. There are loans that wrap those fees into the amount you're borrowing. But as always, the more money you can put down and provide cash-wise at closing, the lower your loan amount, the lower your mortgage payment, and the better your interest rate. And during this time, if you're starting to think about buying a home, you're not going to want to apply for new lines of credit. You're going to want to minimize that, eliminate that risk. That also decreases your credit score when you open new lines. So I hope this information has been beneficial for you, and please continue to tune in to my YouTube channel. I will be posting future videos beyond these steps for first-time home buyers and introducing more in depth my Homes for Heroes program.